Hey everyone, welcome back. Today we'd like to take a look at Volta. Volta is an EV charging company that I do really love. Volta charging, ladies and gents. It's fantastic. However, right now, shares aren't doing particularly well. It's 65 cents per share. There will not be many opportunities where the shares are this cheap. That's to say the least. There won't be. Look at the market cap. 114 million in market cap. So we've got a few things to look at today. Volta Inc. report of Q3 revenue of 14.3 million, net loss of 42.5 million. So we wanna try to understand this, but I do love the Volta website. I really do. First of all, they've got a Polestar 2 right there, and that just immediately put a smile on my face as soon as I saw a Polestar vehicle right there. I was like, yes, that's exactly what I'd like to see. Let's keep it that way. But I do like Volta as a company overall because you have to remember they tend to offer free charging, and they do this through advertisement. And when we go to partners, we get another view of the Polestar vehicle. Beautiful. Absolutely beautiful. But I can honestly say I like a lot of things about the Polestar vehicles. A lot of things. And I like a lot of things about the Volta company as well. I think the way how Volta is doing EV charging, the way they conduct themselves, is done really well. And these are some of their locations. So yeah, their primary focus is indeed on the US. But the closer we go in to these locations, we realize there's a lot going on. New Jersey, for instance. And it shows you where they are available. It also shows you how long you can charge, 2 hours maximum charge. That's really fantastic. And once more, it is free charging through advertisements. So we can't say for sure how well this will work out for Volta long term, but short term, I think they're going about advertisements and charging in a proper direction. Now, third quarter revenue increased 69% year over year to $14.4 million. Record media revenue of 12.2 million, an increase of 9% quarter over quarter and a 66% year over year. Volta network of installed charging stalls was over 3,093 as of September 30th, 2022, adding 173 charging stalls, up to 6% and a 45% year-over-year increase. Volta Media Network surpassed 5,700 screens and 1 billion monthly media impressions. New advertisers includes Google, Neiman Marcus, Peacock, Capital One. Repeat advertisers include Jeep, Target, Disney, Bank of America, and Coca-Cola. And they're constantly looking for new partners to advertise with, new companies to work with. And I must say, I love the advertisement business. The advertisement business is a great business to be in. And if Volta is setting up their business as an advertisement business, not even a charging company, but as an advertisement business, I think that's a fundamentally great way to go about business. Volta reduced runway cash by 43%, which includes a 54% reduction of US full-time headcount. Volta business continues to grow, demonstrating the power and value of the business model and media network, said Vince Kuba, interim CEO at Volta. While Volta's short-term challenges have been significant, we continue to take the aggressive action to reduce costs and to grow revenue, while positioning the company for a long-term success. We're a powerful dual energy and media network delivering the best charging solutions for drivers and advertisers, commercial properties. So this is a look at the revenue. So for 2021, it was over 7.3 million. Now in 2022, it's over 12.2 million. That's a good increase. Network development from over 1,878. Charging network operations from 1 to 38. Network intelligence. I'm guessing this is data that they collect to increase the revenue in terms of advertisements, because that's key. Advertisements, how much you cost for advertisements, how much you make. It's very important to collect data and to grow in terms of understanding how you best advertise to customers. So rise in intelligence from 60 to 196. I don't fully understand what it means, but I know it's data related. So selling, general, and administrative expenses were 40 million compared to 55.7 million in the prior year period. Net loss was 42.5 million compared to a loss of 69.7 million in the prior year period. So the net loss is going down. Last year, they were losing 69.7 million. That's basically 70 million. This year, they've decreased it to 42.5 million. So hopefully they can continue to decrease that loss over time. Now, truth to be told, the Volta company has been losing value for quite some time. Since the IPO, the price was sometimes above $10, but since then it's been losing significant value. Now, where it is right now, just valued over $114 million, it is still seriously undervalued, that's to say the least. But there's not much reasons why this company should be this undervalued. But when the market is doing really bad, which the market is losing a lot of value right now, the small market cap companies, the small companies, they go through the toughest time. They have the toughest fall because everyone pulls their money from the smallest companies first and then they go up the ladder. You know, you got to think about it. If you're invested in Tesla and you're invested in Canoo, if the market is going down, which one are you going to sell? You're going to sell Canoo. You're going to hold on to your Tesla as long as you can because you know overall it's just a much more valuable company, even despite the bad periods. And that's what happens in the market. When people are selling, they sell from the undervalued companies first. The smaller companies, they get hit the biggest. Now, there's other EV charging companies like EVgo. I really like EVgo as well. They do terrific things. There's Blink. Blink is an extremely valuable company. And what's really incredible about Blink is that it's really hard to get these shares above $10. I don't think it's been above $10. It's just really incredible hard. It holds strong above $12, $10. It holds strong. ChargePoint is another brilliant company. But Volta, to say the least, has been an extremely undervalued company in recent years. And that doesn't seem to be changing anytime soon. But that's part of the market. It's cheap. It's cheap for me. And I'm actually quite happy because I know this company will do good things in the future and they're doing great things. And they will continue to do great things. Now, other information, apart from net loss, adjusted EBITDA was 30.9 million loss compared to 22.1 million loss in the period before. So that's increased. Cash and marketable security were 15.6 million as of September 30th, 2022. Weighted average shares outstanding for the 3 months ended September 30th were 168.8 million. So speaking of shares outstanding, let's check it out for ourselves. The public float, 125 million. Shares outstanding in total, that's the total supply, is 173 million. It's got a low share supply, and that's what's really incredible about this share. Companies like Blink, they also have a low share supply at 50 million shares in outstanding supply. So that's why the price is so high. But there's a lot of EV stocks out there that have low share supply, and I'm not too certain why they do this. It is something that they do. Look at that. EVgo, their share outstanding is 69 million. Extremely low. Implied shares outstanding, 195 million. Now, ChargePoint, on the other hand, they have a lot more shares, around 335 million. But that's it for this video. We just wanted to have a look at the financial statements. And I'd say I just want to see Volta continues to expand in a really good way. They've been doing terrific so far, and I still believe in them despite the fact that their share price is losing a lot of value. But I think the more they expand into other countries, especially the European market, the more attention they're going to get. And they do things different from other EV charging. They offer free EV charging. And that's probably why a lot of people don't want to invest, because a lot of big investors are thinking, when are we going to make our money? When this is an advertisement business, it's all about having a library of places where you can advertise. And the more charging points they have, the more they can advertise. The more business they can output, the more they can advertise. They're an advertisement business at their core. Thank you for watching, and I'll see you in the next one.